Investors have seen a few AI-guided exchange-traded funds pop up amid the recent wave of AI hype. These funds use AI and machine learning to select stocks, but the actual trading is still left to humans. But now, at a time when fears of letting AI take over are high, Kaiju ETF Advisors made the bold decision to build the first actively managed ETF that's fully managed by AI. It picks the stocks and it makes the trading decisions. Here's how the specific AI works and why it's potentially among the most efficient use cases for the emerging tech investors have heard so far. The promise and risks of AI have been making headlines more and more in the past few months, and it's often blown out of proportion or poorly understood. The exciting new tech may deliver medical advice in a friendlier manner than some doctors, for example, but it's often inaccurate or not up to date and doesn't factor in the patient's relevant medical history. As such, fears that AI will push doctors out of a job will appear largely unfounded at the moment. In finance, AI can serve as a high-powered data analytics tool, and it's equally great at pattern recognition. So if you feed it intraday trading data, it can make the patterns and make predictions based on those with impressive accuracy. But it still has no intuition and a limited ability to understand context, apply common sense to new situations, or completely create new ideas. So when it comes to more nuanced aspects of financial decision-making, like making longer-term forecasts, understanding the possible implications of geopolitical events, or anticipating market shifts, it becomes a lot less reliable. Where humans are comparatively slow to analyze data, liable to make mistakes if they're tired or distracted, and prone to changing their trades based on gut feelings or bias, machine learning evades all of those risks. Once a human establishes the rules it should follow, it can execute them quickly, accurately, and repeatedly across massive datasets. This approach to AI turns a theoretically sound but practically hard to implement strategy like buying the dip, the strategy behind Kaiju's inaugural Buy the Dip ETF, into a potentially potent and repeatable strategy for generating returns. Even when investors are good at this process, they're likely working at a snail's pace compared to the speed at which AI can do the same thing. In the time it takes a human to set their parameters on their stock screener in the morning, AI can sift through massive volumes of data and attempt to pick out the dips to facilitate trade execution. That's exactly what DIP is designed to do. The team behind Kaiju's tech leveraged their expertise in mathematics, financial behavior, data science, and computer programming to build an AI that finds stocks and makes trade decisions according to a specific and clearly defined buy the dip strategy that accounts for over 25 quantitative factors. Rather than trying to time the market, the proprietary algorithm is trained to simply recognize the patterns that indicate an individual stock is temporarily oversold, regardless of larger market conditions. This leverages its ability to parse data, recognize patterns, and make short-term predictions without asking it to do more intuitive or creative work. The team's depth and breadth of knowledge shaped the strategy, but it's the AI that has the power to examine billions of data points and apply that strategy in seconds, paving the way for swift trade execution and allowing the strategy to repeat itself over and over again.